Welcome to Jill on Money, powered by The Compound. I am Jill Schlesinger, and today I've got an exciting guest in studio. It's Ruchir Sharma, super duper investor, great writer, author, new book. Here, I'm holding it up just in case we don't have the slate in time. Here it is. What Went Wrong with Capitalism? Oh my God, Ruchir Sharma, welcome. That's such an ominous title. Come on, you seem like a very happy man. Why are you all downbeat about capitalism?
Well, it's because I grew up in socialist India back in the 1980s. And I know what socialism was all about. And when I see as to how many young people in America today are fascinated by socialism, all the polls which show that a lot of the young people in America today would, especially if they're Democrats, would rather have socialism over capitalism, then it sort of occurs to me that what went wrong with capitalism? Why are people today so disillusioned in the West with the current economic system that we have? So that's what got me thinking about this. And the book really is a product of that thought process.
So, and this is a project that you conceived amid COVID as, on one hand, I agree that you hear sentiment about disgruntled people, especially younger people. Younger, under 40, let's call it, let's throw the line out there.
Right.
And these are people who may have been squeezed out of the housing market or are not earning as much as they thought they would or saddled with debt from college. And on the other hand, I think, well, these are the same kids who were buying meme stocks and driving things higher and taking $1,400 stimulus checks and playing in the market. So how do we reconcile those two things?
Well, I think that the whole issue is that how are most people feeling about their economic conditions? What is it that they really aspire to do? As I said, that if you look at the surveys, the number of young people who are still living in with their parents, or the number who think that they will not be better off than their parents, all those are at generational lows. So in terms of, sure, this is still America. It's not like I come from India where I've seen poverty and I still see poverty when I go back to India. So that's what true poverty is all about. It's all very relative. This is still America where people are relatively well off. But I think that there is a sense here that they're not going to be better off than their parents, that there's something which has gone wrong intergenerationally. And I think that that's really what got me thinking about this whole project, that what went wrong with capitalism? What is it that, why are people, that even today, you got pretty good economic growth in this country at a headline level, right? In terms of the US economy's been growing at a rate of above 2% for the last 2 years, every quarter in, quarter out and stuff. And yet most people still feel that the economy is on the wrong track because a very limited number of people are benefiting from this kind of economic growth that we have today. So it's a bit superficial. But if you look at it beyond that, a lot of people are still not earning enough in terms of to cover their debts out there. And there's a lot of concern about the role of government as well, that the fact is that the trust in government today is at record lows as well. And the government whom they have to trust at the end of the day to take care of their retirement benefits or a lot of that. So they want stuff out of the government, but they understand that the government today is heavily indebted and they don't trust that the government may be able to sort of fulfill their needs as time goes by.
So if we go back in time, we look at the 40s, the 50s, the 60s, maybe up into the 70s, you'll give me a fact check on that we had productivity gains. We had a lot of growth. We had people doing better than their parents. Of course, there was a slew of people who were coming into the country. So you had first generation and immigrants who were certainly going to do better than they were in their country of origin, coming here, working hard. When did the tide start to shift? Where do you put the line in the sand of when we started to see shifts in how the government is acting in terms of managing the economy, and then also when people are feeling like they're not doing as well? When does that happen?
Yeah, I think that there are different points in time, but I think you have to map the history out here, which is that firstly, look at the 100-year pattern. And I have to go back a bit further here if you allow me to do that, which is that about 100 years ago, before you had the Great Depression, the conventional wisdom at that point in time was that the government is at best meant to do very basic services, which is deliver your mail. And government spending as a share of the economy was very low at about 3% or so. And then you had the Great Depression, which was debilitating for many families.
Wait, before you do that, what were more other developed nations spending? When you say the government was spending 3%, were they all the same?
Yeah, in terms of, some governments were a bit more, but generally government spending was very low in terms of at that point in time.
And no safety nets that were established,
Exactly,
right? And it only was 1913 till we have a Federal Reserve. So, we know that these are sort of new-ish relative to the history of all of these major economies, right?
Yes.
Okay.
Yes.
So now keep going.
Yeah. So in terms of, it was very minimal, light touch kind of government that you had in there. In fact, you had a sort of mini Great Depression in 1920 or so, where the attitude of the government right up until then was that if you have a depression even, the government should do nothing about it. They should keep their hands off and things will naturally solve for themselves. That was the conventional wisdom. And it worked in a way, which is that they did that when you had that mini Great Depression in 1919, 1920, before the really big one. And then that's, in a way, sowed the seeds of the roaring 1920s. The 1920s was a great decade, as we know, for America in many ways. I mean, lots of inequality and other problems, but still a great decade. So you have that incredible period that takes place. Then you have the crash in 1929. And in 1929, then the conventional wisdom was still the same, that the government should do nothing. It almost was a strength taken too far, that you're getting a crash and the government's almost saying that, no, not only do you need to do nothing, you need to liquidate and get rid of all the excesses quickly so you can set the base for the next boom to come. That's because that's what had happened 10 years ago. So it's very conditioned by what had happened in the last few decades, particularly in the 1920 kind of experience. So that's the conditioning. And then you get the Great Depression, and then obviously the pendulum begins to shift, which is that this minimal role for government is just not adequate for society. It's too brutal. And the government, in terms of with more than a hands-off approach, with almost a liquidationist approach, precipitated the worst economic outcome for America in its lifetime, possibly. So then you have
hopefully.
Hopefully. Right. And then the pendulum begins to shift in the other direction, that you need more government, you need a more welfare state and stuff. So it begins to shift, but it's still very gradual. And then, as I map out in the book, decade by decade, the shift begins to get more and more pronounced.
But wouldn't that be the case with any advanced society, that if you look at the monopolies of the late 19th century and the early 20th century, the wealth that was controlled by these very few families, the fact that 8 people could get in the room and bail out the U.S. economy before the Federal Reserve comes in, that's not healthy either, right?
Yes.
So the creation of the welfare state or safety nets is not something that you think is a bad thing.
No, absolutely.
That was a necessary beginning part of the process.
Yes.
And so we have the 30s, we have the war, right?
Yeah.
We have the Great War, and then we have all these people who come back from the war.
Yeah.
And we have more programs that are created, right? GI bills and housing for, obviously that were, let's just say it, racist, because mostly white people got the benefit of that, right?
Yeah.
What happens after that in the post-World War II era?
Yeah, so I'd say that even up till the 50s and 60s, it was generally fine. And the governments then, it's very interesting, that they did not, they did not, outside of the war, they were very cautious about how much debt they would run up. They were very cautious about what sort of deficits that they would run. It was, a lot of caution was there. So sure, government spending was going up. You had increased welfare programs out there, but things were still very cautious. Then you can argue that the first signs of change begin to happen in the 1960s, where the caution gives way, where you start under Kennedy, I think it was, that you had the first tax cuts, even as you had a recovery which was going on. So, it's to try and push the recovery, the government starts to do stuff. You can argue back then. So that was sort of some steps there. So it's a progression. Then in the 1970s, the first signs begin that the government is willing to bail out companies getting in trouble. Until then, in America's history, apart from the brief spell in the Great Depression, the government just did not consider its business to bail out private sector companies.
Okay, let me interrupt you. Is that a good idea or a bad idea?
I think it's a bad idea.
No matter what.
Like this statement says, no matter what, makes me sound like an absolute.
That's what I want to do. I want to create news right now. I'm basically like going to reel you in, baby, reel you in.
Yeah. So
all
I
right.
think
So let's say,
yeah.
Okay, there are certain industries that the government deems essential to the operation of the economy, right?
Yeah.
Is that fair? Is that a fair thing that they make that estimation?
Yeah, that's fair. But I think that what begins to happen, which is what I'm trying to say here, that it's not one thing, but it's a progression.
I get that.
Which is that, firstly, it starts with government in terms of its spending. That's just one. Then you say, okay, we'll keep on spending, but now we will start running deficits. Before that, there was no concept of running deficits continuously. You would run surpluses in good times as well. That was the original Keynesian idea.
Yep.
Then you began to move towards running deficits.
Okay.
Then after that comes the issue that no, the government will also get involved in bailing out companies when they get in trouble. And in
some companies.
Yeah. In the 1970s, there was a lot of pushback at that. So hardly any bailouts actually happened. But the first inklings of that happened. Then I think it was 1984 where the first really big bank bailout happened in America.
Right, the S&L crisis,
yeah,
right?
That was before that. That was the Illinois.
Illinois,
thing back in 84, I think. So that's when you have the first signs that okay, we're going to even bail out banks when they get in trouble.
Mm-hmm.
All these are unconventional things up until then. Then in 1987, something very important happened, which is that you had a stock market crash. And then at that point in time, the Fed chairman, Alan Greenspan, for the first time becomes a Fed chairman who says that the stock market's crash is dangerous for the economy. So I'm going to cut interest rates to bail out the stock market.
Investors.
And that sort of becomes known as the Greenspan put, which is that whenever Greenspan's there, he's going to be there to bail out things on the downside. They don't do anything when stock markets go up too much. Mm-hmm. That's fine. Markets can keep going up. We make a comment that it's irrationally exuberant or whatever, but we won't do anything about it.
Right.
But if the market goes down, we'll be there to support the market.
So let's stop for a second about the 80s. So also what you point out in your book, and you have a big chapter that you don't take a partisan position. You say that in the 80s, under Ronald Reagan, with all the conversation about making government smaller, government expanded.
Yeah.
And is the original sin on the government not so much that the social safety net was created, but that we were unwilling to have a tax rate that would support that safety net? Is that kind of at least for that part of your argument, is that right?
Yes, that's correct. That if you keep on spending, I think that one of the issues I have with some of the conservatives is that for them, a tax cut is good at any point in time, right?
Mm-hmm.
Which is that Reagan for them was great as long as he was willing to cut taxes, we are fine. And I think that their sort of thinking was that if you cut taxes and you squeeze the government so much, spending on its own will come down. And that has just not proven to be correct, which is that spending will not come down if you cut taxes and squeeze the government. The deficits will keep widening. So under Reagan, I think what changed was that the funding of the government changed, which is that they would cut taxes, but there'd be no matching cut in spending. So it was considered fine. You can keep running deficits as well. So that was the big shift.
And what their theory being is that, hey, if we cut taxes, everything will trickle down, right? This is sort of the supply side economics, which is, I think, basically both sides agree it does not work.
Yeah.
And so in the 80s, you have sort of this now more activist Federal Reserve, along with a government that is supporting a social safety net, which probably, it's the old story. It's like, I want the government out of my Social Security, which is like a big joke, which is one quote in one old political quote. And which is to say that people say, I want cut for someone else, not for me, right?
Yeah.
Like this person.
Exactly.
So now we have deficit, debt. We have activist Federal Reserve.
Yes.
And that
activist in a very asymmetric way, which is what I mean that, okay, we'll do it when markets go down, but if markets go up too much, we'll wait to clean the mess after they crash. So it's a very asymmetric way of looking at it.
Why do you think, just talking about the Federal Reserve, why do you think there was, considering that the Fed is supposedly independent, maybe not, but they're supposedly independent. Why are they so reluctant to make changes to policy on the way up?
I think that because it's an unpopular thing to do in a way, which
Yeah,
is
but
the fact that
you're not elected.
I know, but still, I think that like it's maybe the societal. Now, of course, a lot of it, as I said, we can keep blaming policymakers, but a lot of it, I think, has to do with the societal way of thinking about it. So one of the parallels I draw in the book, and it's interesting that you bring this up, is also talk about America's change in approach towards pain management, which is that if you sort of have at the slightest pain, you want to give very powerful drugs, opiates or whatever, very powerful drugs to deal with it, rather than sort of allow things to heal on their own. So sure, you need, again, it's the same parallel that you need medicine to deal with serious problems and crises. But if you're going to make your body addicted, where the slightest hint of trouble, you're going to give your body very powerful drugs, that is also not a good solution in terms of what you do, because then you reduce the body's any natural ability to heal at all, and you reduce the effectiveness also of those powerful opiates that you give your body, and you make it more addicted to it. So I think that is also what's, that the approach, that it's a societal, it's a reflection of what's going on.
Well, it feels like we don't have shared responsibility anymore in some respects. So I remember when the first, when we were talking about the Gulf War, I remember I was managing money still at the time. And I went on a show and I got such hate mail because I said, I think that President Bush should raise taxes immediately. It is a war. We are not fighting it. There's a very tiny population who's fighting it. I happen to have a nephew who was in the armed forces. And I said, we should raise taxes and we should all be happy to do that. And nobody ever wants to, it doesn't seem to me, I shouldn't say nobody. I should say that there appears to be a lack of collective ability to sort of take care of the greater good. But as you say, today that's hard. But along the way, it could have been possible. I mean, I think that someone could have sold it appropriately. I really do. But it didn't happen because they sort of took the easy way out. In the 90s, there was a productivity boom, right?
Mm-hmm.
Was it a real productivity boom? Was it real? Did it really? I mean, like when we talk about the advent of the internet and what it did, is that a productivity boom that we can actually measure?
Yeah, it showed up very clearly, like in data, that, for a few years, I think from 95 till the early 2000s, you got a bit of a productivity boom. But the big surprise was after how quickly it faded, which is that it's faded. And even in the last few quarters, we've had some better data. The trend has been continuously down. And
Why?
I think that's what I try and sort of say in the book, which is that if you look at the sequence of actions, that they're all undermining what should be the creative destruction fiber of capitalism, which is that how do you get rid of the deadwood and how do you let some of the new companies rise? And I think that when you have the government out there, which in a way has socialized risk, it's getting very difficult to achieve that churn. So as I say, that capitalism is about pro-churn, pro-competition, but the government, when it's constantly intervening and supporting, it is supporting the incumbent. And often the support is in favor of the big businesses. So one facet that we haven't argued about, we've spoken about the government's expansion here. We've spoken about the suite of habits that the government engages in, is also about regulation. Mm-hmm. That roughly now, every year, the government for the last few decades has been introducing 3,000 new regulations a year.
I'm exhausted from that, although it keeps my wife employed, so maybe it's not so bad.
And the number of regulation that it has actually withdrawn is 20 in total.
22-0.
Yeah, exactly. So just look at this. Now, when you introduce so many new regulations, there are 2 or 3 major side effects of that. One, that the people who are generally who benefit from regulation tend to be the incumbents. Mm-hmm. Because they already established themselves. They're already there. So they can benefit. For a new person to set up a business becomes so much harder because now you're dealing with 3,000 new regulations or different industries. You talk to the average person trying to set up a restaurant, I'm not talking about like something very fancy here, but in terms of a hair salon, like a restaurant stuff, they're dealing with so many regulations out there. Even in my own journey, when, if you set up your own fund today, it is so much more expensive to do so because the costs have gone up. The administrative costs of doing so, the legal costs of doing so have literally gone up 10 times or so over the last 20 years. So I'd say that in terms of having these incredible amount of regulations, is beneficial for the incumbents because the big companies can easily swallow these expenses on their bottom line. It's the small people, the new people who want to start businesses that makes it a lot more difficult. So,
but some of the legal structure and regulations in place that do favor these big companies, it feels like maybe we've lost, maybe the opportunity is past, but like smarter regulation might have been beneficial to not create, say, tech behemoths, right? If we said, hey, you know what, Google, you're really going to have to spin out YouTube and you're going to have to do this, and that you really are controlling too much and no one else can get in. So how can we distinguish between smart regulation and just like lots of red tape?
Well, I think that it doesn't need to be. I think the thing about smart regulation is that it needs to not be arbitrary. I think, in terms of the fact that it needs to be thought out that, okay, what do we do? Or in terms of that fact that how do we prevent these big companies from making so many acquisitions? But then also go to what the root cause of this is. That if you look at some of the research that I presented in the book, that some of the root cause as to why these companies have become so large is often when you have very cheap money and easy money, then these big companies are able to access that and keep making acquisitions and buying out a lot of the other smaller companies. So it's about the access to very cheap money, in fact, ends up again benefiting these very large, big companies out there. And so that's what I'm saying. That's what's gone wrong with capitalism, which is that capitalism is supposed to see churn. It's supposed to see the rise of new companies. It's not supposed to see the rise of oligopolies or these entrenched billionaires who are there. And very little churn takes place in the number of new companies or number of companies dominating the top 10 companies in America today.
So if you were to wave your magic wand, and I mean, again, anything's possible. You're the emperor of all things capitalist here in the United States. Talk about what you think needs to happen to satisfy kind of both sides, meaning that we have a young, disenfranchised generation that doesn't feel like they can buy a house, that won't feel like they can catch up. We have and across the board, we still have income and wealth inequality, and it's more extreme with people of color. It's more extreme with women, and all of these pieces. And then you also have this established class that says, well, we're the big employers. So I don't really care if a little company fails. We're the ones who are creating all the jobs. So you get rid of us, you're in big trouble. What is it that the Sharma magic wand would do to alleviate the problems, but also not disenfranchise everyone?
Yeah. So I think that in terms of for me, firstly, two things, as I lay out in the book, unless and until, I hate to say this, and be the bearer of bad news.
Yes, let's do it.
Unless and until you get a crisis, there is going to be no change. Because the only time governments change their habits or societies are willing to back meaningful change is when there is a crisis. Now, what do I mean by a crisis?
Yep.
It's when the government loses its ability to bail out, to spend, or to sort of be so interventionist and activist.
So right now, just to be clear, crash of 1987, that was not what happened. The dot-com boom and bust, that actually was a little creative destruction there, right? So we did have destruction. The financial crisis and bailout of your former employer and all the banks, that was not the crisis.
Right.
Pandemic wasn't a crisis. So what is the crisis is it, oh my God, our credit rating has dropped, the bond market has gone berserk.
Exactly.
That's the crisis.
That's the crisis,
okay.
Which is that because so far what's happened, and we've seen this in the post-global financial crisis world as well, is that the private sector, especially households, even some corporates, when they faced a crisis, they got much more sort of thrifty, right? Okay, we can't carry on this way. We can't take on too much debt. So we're going to live sort of in our means, you can argue. The big change which happened post the global financial crisis was that the government said that now we are going to go out there and raise as much debt as possible and spend whatever it takes. And they went completely bananas after the pandemic, which is that at the time of the pandemic, they said that we are going to bail out everyone. No one's going to be allowed to fail. And we're going to give everyone support that they need. And you had a lot of rich people who fed off that support as well.
Okay, but was that a bad decision, meaning that we had no idea? We were like flying blind in a snowstorm, right?
Yeah.
There's people dying in the streets of all the major cities. The world is freaked out. We said, go home. The entire global economy frozen.
Yeah.
And so wasn't it essential that we did this?
Well, yeah. In terms of, even if you say that, what America did was extreme.
Okay.
Because there was very few countries in the world which went ahead and did in terms of provide the kind of stimulus, provide the kind of free checks that America did. And without that much thought as well, where you had people making well over $100,000 who got lots of
pandemic relief, yes.
Yeah, pandemic relief. And it's even worse that even till now, you have some of the pandemic relief measures still going on, like the ERC, I think they call it, in terms of it.
The employee retention credit.
That's still going on in terms of that. So just look at it, that in terms of that. And that's the problem, that once that genie's out of the bottle, you can't put it back in. Whoever reverses a relief program.
Okay, so you said we have to see a crisis.
Yeah.
How would a crisis play out? What's the most likely scenario that you could see that would force the government and the country and all of us to be like, oh my God, wake up, wake up?
Just the fact that the interest on the debt we already have, as it is, the interest payments on the debt today are matching the payments we do on defense or other very critical things. So the fact that interest payments have become so high because the stock of debt is so much high, but a day where the government's ability to pay that debt or the interest rates keep going higher and the government has no ability to control that, I think that is when the government has to sort of then say, then the politicians are like, we just can't carry on this way. We have to do something to change that.
And what does that look like? Is that just, okay, we're going to have taxes are going up for everybody. Doesn't matter who you are. But
even taxes there. I mean, like the issue is that what sort of tax system should we have? Because one thing which I do say philosophically that yes, people should pay their fair tax. There are tons of tax loopholes. Particularly, we know what happens on private equity. We know what happens for lots of billionaires and stuff. But the one philosophical disagreement I have is that when anybody's tax rate is more than 50%, effective tax rate that they're paying, they're effectively working for the government.
No, they're not. They're getting 50% of their money.
No, they're getting, in terms of that, it should not be more than 50 is my point.
Okay.
Which is the fact
that's
that,
your effective, though.
That's the effective, yeah.
So you're saying if you're nearly affluent and you live and work in New York City, you're paying 50%.
Yeah, paying more than 50%.
Right?
Yeah.
Okay.
Yeah.
So I don't view that as like, that's the most unfair thing in the world. I feel like, well, I choose to live here. It's the center of the universe. You can just hear the soundtrack of our beautiful city in the background.
Right.
Right. But if it seems to me at the very least that if you had a system which stopped giving out benefits to a lot of people, that we could raise a lot of revenue across the board. Now, do I think richer people should pay more? Sure. But do I also think that I actually think that the home mortgage tax interest deduction is just hellish. I think it's the dumbest thing in the world. I don't know why you'd preference a homeowner versus a renter. It just seems like an unbelievably biased thing to do.
Right.
So if you start cutting things like that out, and you see that when we capped our state and local taxes at $10,000, the world didn't come to an end. We cried. Everyone whined, but it didn't come to an end. So what I'm asking you is this. If all those taxes were to rise, but not more than 50 or let's say 55%, whatever it is, does that get us out of a hole or not?
No, because the spending is still out of control.
Exactly. So now what has to happen to stop the spending then? Because people want Social Security. They want Medicare. We know that. These are very popular programs.
Yeah.
So what else has to give?
But in terms of the fact is that, on its own, everything sounds justified.
Yes.
But then if you put it all together, that's where the design fails, right?
Okay.
Which is that we have so many crises to deal with. We have climate change to deal with. We got defense to deal with given the wars that we are facing in the world today. So we just have to make choices about what we want to spend on. And in terms of that, do we have to do something about the retirement age that many countries are thinking about, increasing the retirement age or something? So the kind of entitlement reform which has been spoken about in Washington, do we have to do something about that? So I think that these are lots of choices.
I'm going to push back on that. Let's just talk about that for a second, just for fun. Okay. All right. So if we talk about entitlement reform, we talk about, listen, we have to raise the retirement age. People live longer. What do you tell a blue collar worker who is in a physical job who may not be able to work longer?
Yeah.
What do we say to that person?
No, I'm trying to say that in terms of like the distinctions need to be made, right? In terms of what job it is, where they're getting it from, and things like that. Now, as I said, that the problem here is this, like the fact that every proposal that I speak about, and this is why I find these things almost like too sort of theoretical, like to speak about, that everything sounds on its own a bit cruel, a bit heartless.
I am cruel and heartless. I love both of those things.
Which is that, or that you can't do this, you can't do that. Like, for example, if you don't bail out this company, like it happened with the savings and, like the SVB crisis last year, which is that, if you don't bail out SVB, the whole system could come under. Sure. In terms of the fact is that every single action on its own seems like justifiable.
Yes.
But then you step back and look at what the result is. Then don't say that, the consequence that we are facing is not what I like either.
Right. No, I get you.
We can go on doing exactly what we want, which is that keep on spending the way we want, keep on regulating the way we want, and in terms of keep on bailing out
down the road, and then something will force it,
and you will not,
and you won't make a good choice in that crisis.
Yes. No, but there's a second implication, which I think is much less well understood. There are already consequences that we are paying for this, which is that, as you brought up earlier in the show, why is productivity growth today so low? It's like we spoke about, when you have so many oligopolies, you have so many zombie companies. And what do I mean by zombie companies? The fact that nearly 1 in 5 companies in America today can be classified as zombie companies is a telling statement.
What is that definition? What's a zombie company?
Definition of a zombie company roughly is that these companies which have been in existence for a while, but for 3 years in a row, they're not making enough of a core profit to even pay their interest. So they have to constantly keep on borrowing to try and live.
Okay.
These are zombie companies. Now remember, and this is again fascinating because stuff that I point out, that the American media, including the very liberal media, in the 1990s would mock Japan for being this, incubator of zombies, for letting these zombie companies thrive and saying, no, in America, we don't do that. And here we are today with a number of zombie companies in America today as a share of the overall number of listed companies is similar to what we have in Japan and Europe.
But what
and
is
it
it?
exploded.
What would make, in other words, if shareholders are dumb enough to keep lending them money, then who cares? What's the harm of that?
Because if you give them free money, they will do lots of dumb things, including keeping these zombies alive. But there is a harm of that.
Tell me.
The harm is that you keep out new entrants then because they're getting squeezed. Why is the number of startups in America for the last 20, 30 years been declining? The number of the pace of new startups. Startups, you still have startups. The pace has declined. So getting squeezed, which is that on the one hand, you have these zombie companies which are alive. So you see that what's the consequence? You keep out a lot of new companies from rising. On the other hand of the spectrum, you have a few very dominant companies in each of the industries.
Yeah.
So a lot of the middle is getting hollowed out. And that's, I think, really been the issue in America today, which is that the top are doing fine. They're benefiting in terms of it. And then you have the bottom who are getting some support in terms of it, in much more in the corporate world where the zombies are alive. Everything in the middle, which is the vast middle, is getting squeezed out.
So
just like, those old, I remember cartoons that I had seen, which sort of stayed with you about it, which is Robin Hood basically saying, I rob the rich to pay the poor, the middle class are on their own.
Yeah, really, no kidding. It's interesting, though, when you talk about the zombie companies, because you would think that at 5.25% or 5.33% Fed funds rate, many of them would go away. So what if interest rates were to stay higher for longer? Would that solve some of this?
Yes, it would. I think so. In terms of the fact that when the price of money today, there's a price to it. We're at the end of free money. And remember that the prices only come now because the real interest rate, adjusted for inflation, has only recently turned positive. Before that, the real interest rate was zero or negative for a very long period of time. Only now has it turned positive. So the fact that there's a price to some stuff will stay. But these changes take a while to take effect as well. Why is the economy in the US today still so strong, even though interest rates have gone up? It's a subject I've thought about a lot because of two reasons. One, the amount of stimulus that the Fed and even the government had done, including the amount of money that they had poured into the economy, was still sloshing around the entire system. So it's taken a long time for that, so-called excess liquidity to be absorbed. Second is that even till last year, the government was still fiscally very stimulative. In fact, last year's about 1/3 of the entire growth was directly attributed to government stimulus and spending. So
even so last year.
Even to last year, 2023. We're 3 years after the start of the pandemic.
Yep.
And you still have the government playing such an activist role in terms of its stimulus. You still have so much excess liquidity that the Fed created because of the amount of money it printed during the pandemic, that even with 5% plus interest rates, it's not really biting as yet, but it will over time.
Let's say it's, here we are in 24, the end of 25 comes around, and there's a stalemate in Congress, and all the personal individual tax rates go back to where they sunset back to the end of 2017, right? In your mind, that would be a good thing, no?
But that's already the assumption, which is that the CBO and other people are already working on the assumption that that's going to happen.
But if they vote, but again, as you said, if a politician who doesn't want that to happen and wants to kick the can down, no, we're going to make these permanent, and whatever gimmick they come up with to figure it out, that would contribute to what is going wrong with capitalism in your mind, right?
Yes, because that person is not saying, okay, we're going to cut spending as well somewhere to try and make up for that. That person's saying, cut taxes, we'll get economic growth somehow, and we'll all be fine. And so that is not a solution, because we have tried that, and that's not worked.
So when we look at some of the numbers, I think there was it might have been the Federal Reserve of either St. Louis or Atlanta. They came out with a study, and they said, even factoring in inflation, that the middle to lower end of the income earners, so let's say, the first and second quintile probably, or maybe the third, that they really did on an inflation-adjusted basis make more money. They took more money home since before the pandemic, right? How come people don't feel better? If wages have gone up, especially for the low end, right? If I was making $12 an hour in 2019 and I make $23 now, why don't I feel better?
No, I think there are two things. One, in inflation-adjusted terms, the data that at least I've seen, real wages got wiped out.
Still?
Yes, still.
I thought the lower end was able to hang on.
There are some things in terms of if you add some supports back in and stuff like that, that'll happen. But roughly, the wages have got wiped out. But in fact, as I argued in a recent piece that I've just penned, which is that it's not just about, as I said, that it's not just about the near-term numbers. The sense of decline is much deeper, it's much longer. And so in that way, I'd say that, this is both, trying to sort of be charitable a bit to Biden. It would be that it's not just under him that this feeling has come that America is moving in the wrong direction and economically it's not doing well. It's been a feeling that's been building for decades under previous presidents, and each generation, each decade, new people coming in, they're feeling worse and worse about what's going on because of things like inequality that stares them more in the face, and also the fact that things become that you really want, like housing prices, they become more and more unaffordable for people to try and have their own home, and yet that's not included in the consumer price inflation.
I know.
Right? So
if you put that in, you really. But it's interesting that you talk about that. I sort of think too, I have a lot of nieces and nephews. I married into a big Italian family. And I think about how the younger nieces and nephews, how they've grown up and the events that they've seen, right? So if you think about, you're 25 years old and you heard about 9/11, right? You were a baby, but then you had a financial crisis. And then it took a long time to come out of the financial crisis. And so many people lost their homes. And there are a lot of people who grew up watching their parents struggle, right?
Yeah.
And then we sort of come back, and then you get a pandemic, and it feels like it's like one hit after another. How does that contribute just to the mood? I mean, the numbers are the numbers, but also, like as you said, the economy's doing well, but people don't feel that it's doing well because we have this built up anxiety. Really, it's financial anxiety. And how do we deal with that?
You can argue that, but again, I have a line that's going to sound maybe like a bit heartless to you, but
yes, you're heartless.
that I think that history is better remembered than it's lived.
Yeah,
which is that we have always faced crises, right? So in terms of, we started this conversation about having two Great Depressions virtually, or two depressions within a span of 10, 15 years back in the and in fact, back in the late 19th century and early 20th century, I think the statistic which I have in there is that America was in recession more than 40% of the time.
That's crazy, right?
That's crazy, right?
Yeah.
So in terms of that, so just compared to where we are today, where recessions have become far more rare, the expansions have become far longer, and yet we're feeling that. So I think that, it's like we got to put this in perspective, which is that we've always.
I think that's a great point. And I also think it's a good point to end on, which is capitalism works when there is a churn, as you say.
Yes.
The thing is, like, it sucks if you're feeling the churn. If your company is the one that goes broke, right? If you're the one who worked at Lehman Brothers and you're the one who lost your job and there's not a job for you, it sucks, right?
Yeah.
Okay. But that's kind of normal, and that we need a little bit more of that churn. We need a little bit more of the government pulling back and ceasing just this unending, like, it's almost like we have a snowplow parent. They want to smooth out the road ahead of us, right?
Yes.
We're going to smooth out all those bumps in the road. And as the government, and maybe you think that's wonderful if you're the recipient, but in the long term, what you argue is it's hurting everybody. It's hurting the system.
It's because for me, capitalism is what? It is about equality of opportunity, right? Not about equality of outcomes, because the outcomes should vary depending on merit, but it should be about equality of opportunity. And if you have the government that's already, which is always there to support whoever's in business, you're helping the incumbent, and you're taking away the opportunity for new people to create new businesses, for new people to enter the workforce. That's what you're doing. And you're giving, the government is subjecting itself to being influenced by those who are already in positions of power. If you look at the lobbyists today in Washington, they are mostly funded by the largest tech companies today.
And financial companies.
But much more tech now, because there's a shift in the balance of power.
Yeah.
You could argue financials or oil at one point in time. Those were the big funders. Today, it's all the big tech companies. So they're all out there lobbying to make sure that whatever regulation gets passed is in their favor, in terms of the more costs you have for telling everyone that you need to do this, you need to do that. In terms of it, you're actually helping the incumbent. So the regulation, by definition, tends to be pro-incumbent. I think we have to keep those basic lessons in mind. So what I'm trying to say out here is that how do you get back to a system where you feel that you have equality of opportunity? And the government, as that old line goes, that the road to hell is paved with good intentions. So the government may be well-intended, you can even argue, but in terms of the consequences of what you're seeing are major distortions to what is capitalism. This is not what the founders had in mind. So even when the young people today are disillusioned with the current economic system, don't even call it capitalism. This is a very distorted form of capitalism than what people had in mind.
So can you leave us with one upbeat idea for a young person watching that give us just one quick example of where capitalism is working?
That's great, because I have a whole chapter on that.
I know, I read it.
Talk about, for example, the richest country in the world today is Switzerland. And I devote an entire thing in terms of that. Well, it's one of my favorite countries to visit, by the way.
It is?
I will disagree on that.
Okay, you like cheese and chocolate. Move on.
No, much more than cheese and chocolate.
I'm just kidding.
In terms of the fact that I just love the way that they've got the balance correct there. In terms of it, that where the government intervenes, where it does not intervene, how the healthcare system functions, in terms of that. So they've got the balance correctly mapped out there. And then even the idea of progress, even in going back to my home country from where which is India, I've seen what socialism was like. But since then, India has become less socialistic, tried to become a bit more free market oriented and a bit more capitalist. And you can see the way poverty levels in India have fallen very significantly in the last 30 to 40 years that they've taken that journey.
As long as you're a Hindu. Otherwise, not so great.
Yeah, okay. So that's a totally different debate. But then I've also had extensive examples in the book in countries like Taiwan or Vietnam, a communist country.
Yeah.
But it's following the Chinese lead in one very important way, that when the Chinese economy was doing very well, the government kept on reducing its role. I think one of the things that we sort of forget is that China began as a very controlling government enterprise, and the government kept on reducing its role until Xi Jinping sort of came to power. But look at the benefits that saw, when China did that.
So we have Switzerland, we have Taiwan.
Yeah. And we have Vietnam.
And Vietnam. Those
as
are
three countries that I quote as case studies, and I can go on, but those are three sort of big highlights. Even Eastern Europe.
And if you're here in the U.S. and you're a young person and you feel disheartened, what do you do with that feeling?
Well, I think the fact is that hope for this change to take place. But the problem today is that many of the policymakers tend to be status quoists. What they will tell you is that if you do anything to change, there'll be too much disruption and it'll lead to very negative consequences. Because every time you talk about the fact that maybe the government shouldn't, bail out these companies that easily, because it also creates a sense of unfairness. If the government is bailing out these very large companies, the average person thinks, I'm struggling here. Why is the government not bailing me out? Why is the bailout
that
money
happened in
only
the
going to
house?
that?
Certainly in the great financial crisis, that was exactly what happened.
That sentiment, and that's another form of trickle-down economics in a way. Because the trickle-down economics we associate with is the Reagan kind of stuff that, okay, you sort of, let the rich benefit and it trickles down. But this bailing out of big companies and saying any company, or especially the large ones, are too big to fail. Because if they fail, everybody else is going to suffer. This is also a version of trickle-down economics. Because what it's saying is that if these large companies don't fail and they keep on doing well, you will benefit somewhere because these companies are prospering. But in fact, they could be choking the growth of new companies.
Right. And the ability, if someone loses a job in one of those big companies, they can go out in one of these new companies and maybe have a much better career.
Yeah, and I think that the one thing which a lot of people feel, again, something I document in the book again so extensively, is that so many towns in America today are dominated by one big company.
Yeah.
That they're there. And so in terms of, you're totally beholden to them. You have very little bargaining power, wages, nothing. In terms of, you're beholden to that big company. And so one big aspect that I've spoken about in the book is this widening corporate inequality. That if you work for one of the top companies, you're doing fine, you're earning well.
Yep.
But if you work for anybody else, the gap between how much you're earning
is huge.
Yep. And so that is also a source of great dissatisfaction. So I think that's what I'm trying to say, trying to point out as to what are these sources of disaffection that have taken place. Why is it happening? And then saying that one thing that we haven't considered is the role that a very expansive government, where the suite of habits is not just about spending, it's about rescuing endlessly, it's about regulating. Those are things which have contributed to this very distorted form of capitalism that we have today, and why people are feeling so unhappy with the economic system despite these good headline economic numbers.
Okay, so if you want to feel better about your crappy feeling and you want to feel like, wait, there is a reason, buy this book, okay? Ruchir Sharma, What Went Wrong with Capitalism? Thank you so much for joining us. And we thank you so much for watching us. And we are delighted you do so. Please leave us comments. And, I'll send all the negative stuff to Ruchir himself. Okay, thanks. Thanks for watching.
Thank you, Jill. Thank you.